So last week, and I'm going to change the names to protect the innocent, but a corporate director, we'll call him Gary. I was on a phone call with him last week, and Thursday, and he says, "Mike, I need some help." And Gary is a corporate director of one of the big 4 UK banks, and he looks after the corporate customers in one of the regions of the bank. And he's saying, I need to grow my business, he said. And, I'm looking to attract, successful companies with 50 million turnover or more from my competitors, and no doubt some of them in this room. And he says, it's really difficult. And I said, well, why is that, Gary? He said, well, the trouble is all my products and services are pretty well undifferentiated. All I can do is try and compete on price. And what he was asking me and what he was asking IBM to do was there something we could do around big data, because he'd read about it, that we could do some data mining and help him in that journey. So I thought that was really good timing, and given that was Thursday, that would be a good topic to focus on for the speech today. So I'm having trouble reading this. So drawing on that conversation, I felt that oh damn, sorry, this was a bad idea. So I thought the key themes here were about the banks being internally focused and not externally focused, as they should be. That they were transactionally orientated and not value based, and I think missing out on the opportunities that exist to innovate and actually provide a real service to business in the UK. Which is about rebooting the UK economy and supporting business. So what I'd like to do is talk to you now over the next few minutes about what I'm seeing that's happening in the market today, and I think how I think it could be. So let me start by thinking about this idea of internal focus, and again perhaps draw on an example from the past. So, banks have honed their ability to assess the performance of business, developing their skills over 300 years. And as a corporate lender in the 1990s, I would be undertaking my credit assessment of my business customers, drawing on even then several years of experience. And I recall actually, back in, I think it was about 1998, there was a small startup company called Neal's Yard Apothecary. And I recall the lady who owned that business required some sort of finance. And I don't know, does anyone here shop at Neal's Yard Apothecary? Because it does exist in the shops today. But anyway, so if not, they're very good for Christmas presents, last-minute Christmas presents, I'd say. And what she, the brand is very much linked to this idea of these kind of blue bottles. And I think she was rebranding and was asking for finance to support that. So obviously I sat with her, and then I examined the management accounts, I looked at her forecasts, I had consideration for the broad management team, what was happening with the products, what was happening in the market, and I benchmarked Neal's Yard Apothecary against similar successful companies. And obviously time has passed, and sadly you're obviously not shopping there, but it is actually a successful franchise in many of the prime locations on the shopping streets. And for banks, new technologies have emerged to allow automation and credit modelling, and in some cases, sadly, have reduced the role of the relationship manager to not much more than a sales role. In reality, I think banks in that period have changed little, and therein lies a challenge to my colleagues here. So let's be clear, what is going on here? What is this about? The bank is working out, is the loan good business for the bank? So how could the future look? My belief, my judgment is we should turn banks on their heads. We should let them use these skills and the knowledge that banks have about business, about markets, about industries, successful growth strategies, peer group company benchmarks to support UK businesses' growth plans. After all, growing businesses consume more, create more wealth, create fees and commissions for banks. So I don't see any inconsistency in that message with the demands of shareholders of banks. So here's an opportunity, I believe, for banks to get on the front foot. The political rhetoric that we see today about no growth without lending, and I'm sure there'll be questions about this later, is too narrow in my view. The reality is it's much more about the skills, structure, process, talent and marketing. And I think the focus and the discussion should be around how banks can play a role in that too. So that brings me to my second theme. And my second theme is about what I'm seeing in the marketplace from an IBM perspective. And that's about the massive expenditure that we're seeing in banks in meeting regulatory change. And I know some of my friends here on stage will talk about some of the regulatory challenges that they face. And also the replacement of obsolete infrastructure. And that's happening in banks large and small. But the issue here is the processing that Gary was talking about, the products that Gary was talking about, being undifferentiated. The reality is that in these systems and in the products and services that they support, there is little competitive advantage. After all, for most people in this room, a payment is a payment. Ultimately, it's how much you're going to pay for it. There may be some added value around it, but it ultimately becomes, how quickly will a payment be made and how much am I going to have to pay for it? So why is it that banks around the globe, including those in this country and in Ireland, are paying, for example, it could be north of £300 million to replace some of their core banking payment engines? My view is that the industry would be much better served through greater collaboration between banks in establishing shared services, supporting many and not one bank, and in doing so, massively reducing the overall spend in the industry. In establishing those these industry utilities and saving that vast amount of investment, I believe that that investment can then be redirected in providing services and new ideas and innovation which will support business in driving growth. So the last theme I wanted to kind of focus on was really to try and bring together this idea of innovation and utilities and the way in which we add value to the market. And this is where I see how can banks help reboot the global economy and the UK economy. So I'm a keen user of eBay. Last month I actually managed to sell a car for the first time, actually a real major transaction in my life. And of course with the nice sunny weather, a parasol is arriving, and I'm confident that it's going to arrive this week. Isn't it funny? Why is it that we see such huge opportunity and huge success in the P2P, person-to-person market in these auction sites, but not, and obviously in the case of eBay, powered by one of the world's largest banks. I mean, PayPal now has 100 million customers. But we're not seeing that in the business market, in the B2B market. I mean, there are companies that are operating like that, and you can look at, for anyone who's tried Alibaba, which is largely based out of China. But the concept is brilliant, isn't it? So if I'm a buyer or a seller in business, and I want to find someone who'll provide components as part of my supply chain, and I want to look at what's available, then I could go to, why couldn't I go to an auction site and find potential suppliers around the world who might be able to provide that? If I'm selling coffee in the UK and I want to source coffee beans from Kenya, why can't I go on a site and find potential suppliers of coffee beans in Kenya? So conceptually, it's a really good idea, and it's consistent with the way in which our personal lives and personal technologies are moving us. They're there, but they're not succeeding. Why is that? That's because people who use these sites are concerned about security. They're concerned that is the guy on the other end, the buyer or the seller, bona fide? Is he really representing a real company? Are the goods that are on offer here actually as described? When am I going to pay for those goods? Am I going to pay them on dispatch in advance, or am I going to pay them when they land at the port here in the UK? Now, isn't it great to be having this conversation in this room, surrounded by seafaring people, and no doubt there are pictures of merchants around us who stand behind those guys? Because actually, if you think back 300 years, the conversation, the challenges that I've just talked about, those concerns about security, were exactly the concerns that merchants were having way back in 300 years ago. And as a result of that, Lloyd's of London was formed, and many of the banks that are represented around this room have their roots in those conversations. Letters of credit were born. Banks took risk in trade, and as a result made money. And so why is it that that I'm not hearing a conversation that says, why don't we converge this modern thinking in business with the age-old competencies and capabilities of banks, and bring together and do something really innovative? And I think it's that level of thinking that is required to lift us out of the malaise of the European crisis and the concerns about the connectedness of the West with the emerging economies.